Hey everyone, welcome back to ScribbleStokes. Right now, the crypto market is a wild ride. Bitcoin just dipped 5% in 24 hours, sitting at $58,000, and the fear and greed index is screaming extreme fear at a score of 25. Are we in a natural correction, or is something more sinister at play? Today, we're diving into crypto market manipulation, breaking down the latest trends and arming you with the tools to spot these traps in real time. Let's talk about whether you're being played and how to avoid becoming a pawn in someone else's game. First, let's set the stage. Market manipulation isn't new to crypto. With low regulation and high volatility, this space is a playground for whales, those big players with deep pockets who can move prices with a single trade. Just last week, on-chain data from Whale Alert showed a transfer of 10,000 BTC, worth over $580 million, from a dormant wallet to a major exchange. Coincidentally, Bitcoin's price dropped from $61,000 to $58,000 within hours of that move. Was it a whale dumping to trigger panic selling? Possibly. These kinds of moves often create cascading liquidations, especially when leveraged traders get caught off guard. And with exchange netflows showing more Bitcoin heading to trading platforms than leaving, it's a sign that selling pressure might be orchestrated, not organic. Now, let's dig deeper into how these manipulations happen and what to watch for. One common tactic is the spoofing of order books. Whales place massive buy or sell orders at key levels, say a sell wall at $60,000 for Bitcoin, to create the illusion of resistance. Smaller traders see this and hesitate to buy, thinking the price won't break through. Then, the whale cancels the order at the last second, letting the price pump past that level, often to $62,000 or higher, while retail traders miss out. Another trick is the wash trade, where bots trade back and forth to inflate volume and lure in FOMO buyers. Check out CoinGecko or CoinMarketCap data. Some altcoins with low liquidity show 24-hour volumes that are 10 times their market cap. That's not natural. Then there's the stop-loss hunt. Whales push prices just below key support levels. Bitcoin's recent drop to $57,800 briefly breached the $58,000 support, triggering stop-loss orders and forcing retail traders out before the price bounces back to $59,000. If you're using technical indicators, watch the RSI. When it drops below 30, like Bitcoin's current 28, it's oversold territory. But don't jump in blindly. Whales often wait for retail to buy the dip, then dump again to lock in profits. So, what does this mean for you as a trader? The implications are huge. If you're not paying attention, you're likely reacting to manipulated moves rather than real market sentiment. The fear and greed index at 25 shows panic, but is it justified or is it manufactured? Look at the funding rates on futures markets. When they're heavily negative, like they are now at minus 0.01% on Binance, it means shorts are paying longs, a sign that bearish sentiment might be overdone. But here's the kicker. Whales know this too. They can use that sentiment to fake a reversal, pushing Bitcoin back to $60,000 with a sudden buy order, only to dump at the top. Your job isn't just to trade the chart, it's to trade the psychology. Stick to your risk management. Don't over-leverage. If you're trading with 10 times leverage and a 2% move wipes you out, you're playing into their hands. And always zoom out. The daily chart shows Bitcoin still holding above its 200-day moving average at $56,500. A real breakdown hasn't happened yet, despite the noise. Alright, let's wrap this up with some actionable steps. Start by tracking on-chain data yourself. Tools like Glassnode or CryptoQuant can show you whale wallet moves and exchange flows in real time. Set alerts for large transactions so you're not caught off guard. Second, Don't trust sudden pumps or dumps without volume confirmation. If Bitcoin spikes to $62,000 on low volume, it's likely a trap. Third, use multiple indicators. If the RSI is oversold, but the MACD shows bearish divergence, hold off on buying. And finally, join communities or follow Twitter accounts like Whale Alert for instant updates on big moves. Knowledge is your shield in this market. I'd love to hear your thoughts. Have you spotted any shady moves lately? Drop a comment below and let's keep this conversation going. Subscribe if you want more breakdowns like this and hit that notification bell so you don't miss the next video. Before I sign off, here's something to chew on. With all this manipulation, are we heading toward a market where only the informed survive? If regulatory clarity doesn't come soon, the cat and mouse game between whales and retail might define crypto for years. Stay sharp, traders. Let's navigate this together. See you in the next one.